Have you ever paid a bill simply because it arrived in your mailbox? Most of us have. We see an amount due, assume it's correct, and send the payment without asking questions. But what if I told you that thousands of American seniors lose hundreds, and sometimes thousands of dollars every year by paying bills they either don't owe, could legally reduce, or should review before paying? The truth is, retirement changes the way your finances work. New government programs, Medicare rules, utility assistance, tax relief opportunities, and senior discounts can all affect what you actually owe. Unfortunately, many retirees never hear about these opportunities. They keep paying the same bills year after year because no one tells them to stop and look more closely. Today, we're going to talk about 5 bills every senior should check before paying in 2026. These aren't tricks or shortcuts. They're situations where taking a few minutes to review your bill could help you avoid unnecessary costs. By the end of this video, you'll know what to look for, what questions to ask, and why checking first can sometimes save far more than paying immediately. Before we begin, let me make one thing very clear. This video is not telling anyone to ignore bills or refuse legitimate payments. If you owe a bill, you should absolutely pay it. The goal is different. The goal is to make sure the amount is correct, that you're receiving every benefit you may qualify for, and that you're not paying more than necessary because of an error, outdated information, or a missed assistance program. Many seniors assume every bill is final, but in reality, some bills deserve a second look before you write the check. Let's start with bill number 1, your Medicare-related medical bills. This is one of the biggest areas where retirees accidentally spend more money than necessary. After visiting a doctor or receiving medical treatment, many seniors receive statements that look official and urgent. Seeing medical terminology and payment amounts can make anyone feel pressured to pay immediately. But not every medical statement is actually a bill, and not every amount listed is the amount you truly owe. Imagine a retiree named Robert. After a routine doctor's visit, he received paperwork showing several $100s in medical charges. The document looked serious, and he assumed payment was due immediately. Fortunately, before sending money, his daughter encouraged him to compare the paperwork with his Medicare summary notice and the explanation of benefits from his insurance plan. They discovered the document he received was not a final bill at all. It was simply a summary of services. Weeks later, after Medicare and his supplemental coverage finished processing the claim, the amount he actually owed was significantly lower. Had Robert paid the first document without checking, he could have created unnecessary confusion and possibly waited weeks for a refund. This happens more often than people realize. Medical billing involves several steps. Healthcare providers submit claims. Medicare processes them. Supplemental insurance may pay part of the remaining balance, and only then does the final patient responsibility become clear. Paying before understanding each step can create unnecessary stress. That's why many financial counselors encourage retirees to compare their Medicare summary notice, insurance explanation of benefits, and the provider's final invoice before making a payment. The second bill every senior should check carefully is your property tax bill. For many retirees, property taxes remain one of the largest annual expenses after paying off a mortgage. What surprises many homeowners is that numerous states, counties, and local governments offer property tax relief programs specifically for older adults. Some programs provide exemptions, others reduce assessed property values, and some allow qualified seniors to postpone certain payments under specific rules. Consider Margaret, a 74-year-old widow who had lived in the same house for over 30 years. Every year she paid her property tax bill without asking questions because she believed everyone paid the same way. During a community meeting, another retiree mentioned a local senior property tax exemption. Margaret decided to contact her county office to learn more. After reviewing her eligibility, she discovered she qualified for a program that reduced her annual property tax obligation. The surprising part wasn't that the program existed, it was that she'd qualified for years without knowing it. This doesn't mean every senior automatically qualifies for reduced property taxes. Eligibility depends on where you live, your income, your age, and local regulations. But the lesson is important. Before paying your next property tax bill, take a few minutes to check whether your state, county, or municipality offers senior-specific tax relief. One phone call or visit to your local tax office could provide information you never knew was available. Now let's move to bill number 3, your utility bills, especially electricity and heating costs. Energy expenses have become one of the fastest growing household costs for many retirees. Air conditioning during the summer and heating during the winter can place significant pressure on a fixed retirement income. What many seniors don't realize is that utility companies and government assistance programs sometimes offer payment assistance, budget billing options, energy efficiency incentives, or discounts designed specifically for older adults and qualifying households. Take the example of James and Linda, a retired couple living on Social Security and modest retirement savings. Every summer, their electricity bills seem to climb higher, forcing them to cut spending in other areas. One afternoon, they attended a local senior resource event where they learned about available energy assistance and utility discount programs. After contacting their utility provider and reviewing available options, they found programs that helped reduce seasonal financial pressure. They wished someone had told them years earlier because they had assumed the bill arriving in the mail was simply the amount they had no choice but to pay. The important message isn't that every utility bill will suddenly become smaller. Instead, it's that retirees should never assume there are no programs available. Utility companies, local agencies, and community organizations sometimes provide options that can make monthly expenses easier to manage. The only way to know whether help is available is to ask before automatically paying every bill without review. So far, we've covered 3 of the 5 bills that deserve a closer look before payment: Medicare-related medical bills, property tax bills, and utility bills. But the next 2 are even more surprising because they involve expenses many retirees pay month after month without ever questioning whether they're still appropriate or whether better options may exist. And one of those remaining bills has the potential to save some retirees far more money over the course of a year than they ever expected. Not because the bill disappears, but because understanding your options can make a meaningful difference over time. Now let's continue with bill number 4. And this is one that quietly drains thousands of dollars from retirees every year without them even realizing it. I'm talking about bank fees, investment account fees, and financial service charges. The reason this bill is so dangerous is because it usually doesn't arrive in your mailbox. Instead, it's quietly deducted from your accounts month after month. Many seniors check their account balance, but never look closely at the fees being taken out behind the scenes. Think about a retiree named Carol. She had been with the same bank for nearly 25 years. Every month she noticed small service charges on her checking account, $12 here, $15 there. She assumed those fees were simply part of banking. One day her grandson helped her review her account and discovered that the bank now offered a senior checking account with no monthly maintenance fee. A simple phone call later, those charges disappeared. Over the next year alone, Carol kept more than $100 that had previously been disappearing without question. It wasn't life-changing money, but it was her money, and there was no reason she should have continued paying unnecessary fees. The same idea applies to retirement investment accounts. Some mutual funds, managed portfolios, and financial products charge annual management fees that many retirees never notice because the money is automatically deducted. While professional financial advice can certainly be valuable, it's important to understand exactly what you're paying for. Reviewing your annual statements and asking your financial institution to explain every recurring fee can help you better understand where your retirement dollars are going. Sometimes the answer confirms the fee is appropriate. Other times, you may discover options that better fit your needs. Now let's move to bill number 5, and this may surprise you because it affects millions of retirees every single year. It's insurance premiums, whether we're talking about auto insurance, homeowners insurance, or supplemental coverage. Many people buy an insurance policy years before retirement and simply allow it to renew automatically every year without reviewing it. Imagine a retired couple named Michael and Susan. They had faithfully paid the same auto insurance company for over 15 years. They believed loyalty would automatically guarantee them the best price. One afternoon, while organizing financial paperwork, they decided to call their insurance company and ask a simple question: are there any senior discounts or policy adjustments available? During the conversation, they discovered they qualified for discounts they had never requested and were also paying for coverage they no longer needed because they were driving far fewer miles after retirement. By updating their policy, they reduced their annual insurance costs without sacrificing the protection that mattered most. The important lesson here isn't that everyone should switch insurance companies. The lesson is that retirement changes your lifestyle. You may drive less, you may work from home or not work at all, you may have paid off your mortgage, you may have installed safety devices in your home. All of these changes can affect insurance costs, but insurance companies don't always automatically update your policy. Sometimes you have to ask. Now that we've covered all 5 bills, let's step back and look at the bigger picture. The common thread connecting every one of these expenses is surprisingly simple. None of them should be ignored, but none of them should be paid blindly either. Retirement is a time when every dollar matters. Saving $20 here or $50 there may not sound exciting, but over the course of a year, those savings can become meaningful. More importantly, reviewing your bills helps you catch mistakes before they become expensive problems. There's another reason this conversation matters. Unfortunately, scammers know that retirees are careful about paying bills. Criminals often create fake invoices that look surprisingly real. They send letters that appear official. They create emails pretending to be utility companies, Medicare providers, banks, or government agencies. Their goal is simple. They hope you'll pay quickly without verifying the information. Here's a rule that can protect you. If you receive a bill you don't recognize, don't panic and don't rush. Take a moment to verify it using a phone number or website you already know is legitimate, not the contact information printed on a suspicious document. If something feels unusual, ask a trusted family member, financial advisor, or the company directly before sending any money. Remember, legitimate organizations understand that customers ask questions. A real utility company won't be offended if you verify a bill. A real insurance provider expects policyholders to review their coverage. A real medical provider can explain your charges. Taking a few extra minutes to confirm information is not being difficult. It's being financially responsible. Let's quickly review the 5 bills every senior should check before paying in 2026. First, Medicare-related medical bills. Make sure the claim has been fully processed before assuming the amount due is final. Second, property tax bills. Check whether your state or local government offers senior tax relief or exemption programs. Third, utility bills. Ask about energy assistance, budget billing, or senior discount programs that may be available. Fourth, bank and investment account fees. Review recurring charges and ask whether better account options exist. And fifth, insurance premiums. Review your coverage regularly to see whether retirement changes qualify you for lower costs or different policy options. The biggest financial mistake many retirees make isn't spending too much money. It's assuming every bill is automatically correct and every payment is unavoidable. Sometimes a simple phone call, a careful review, or asking one additional question can uncover opportunities that have been sitting there for years. You worked for decades to build your retirement. Every paycheck, every contribution, every sacrifice helped create the financial security you have today. Protecting that money doesn't always require complicated investment strategies. Sometimes it starts with something as simple as carefully reading the bills that arrive in your mailbox. If today's video encouraged you to take a closer look at your monthly expenses, don't keep this information to yourself. Share it with a friend, a neighbor, or a family member who is retired. One conversation could help someone avoid paying money they never needed to spend in the first place. And if you enjoy straightforward explanations about retirement, Social Security, Medicare, and practical money-saving strategies for American seniors, be sure to subscribe and turn on notifications. Every week, we cover topics designed to help retirees stay informed, protect their finances, and make confident decisions in retirement.